Good morning, my dear students. Question number 60b we are going to study now, and this question number 60a, if we understood that the same type of question is question number 60b. Okay, so we can directly go to the question. The capital of A, B and C stood at 20,000, 15,000, 10,000 respectively after the necessary adjustment in respect of drawing and net profit. So this is coming after the adjustment of drawing and profit. Then subsequently it was discovered that interest on capital at the rate of 10% per annum and interest on drawing 130, 90, 50 respectively have been ignored. Profit for the year already adjusted was rupees 10,000. Drawing of the partners were 1,800, 500 respectively. They share profit and losses in the ratio of 2:1:1. Give necessary journal entry to rectify the account. Previous question they have asked capital account also. So here no need of making the capital account, after that journal entry. Okay. So here this amount 20,000, 15,000, 10,000, this is the closing capital. This is not the correct closing capital, but after making two adjustment is made, this amount is given. Which are the two adjustment? One is drawing is taken and net profit also taken. After that this is coming, and we know interest on capital we have to calculate always on opening capital. This is not opening capital. This is the capital after drawing and net profit. So first step is we need to find out the opening capital. Okay, and to find out the opening capital, either we can make a capital account that I told in the previous question, and without preparing the capital account also we can find out that opening capital. And here I am using that formula for calculating the opening capital. This is a partner A, B, C. Then given capital, the capital which is given in the question is 20,000, then 15,000 and 10,000. Then profit is added. Okay, in this profit is included, so we need to minus the profit. We need to minus. How much profit it is distributed? It is saying in the question that profit for the year already adjusted is 10,000. So 10,000 is already adjusted. This is 10,000 in profit sharing ratio, that is given 2:1:1. How much it will come? 4,000. No, it is divided by 5, then 2. Okay, 4,000, 2,000, 2,006 only coming. This is okay, it is coming 2,500. This also 2,500. This is 5,000. This we are minusing. Okay, and plus drawing is already subtracted to get this amount. Drawing is subtracted, so we have to add back, then only we will get the opening capital. Drawings we are adding. The amount of drawing is given 1,000, and here 800, then this is 500. Now the opening capital will be, we will get the opening capital. This will be 16,000, and this is 13,300. This is 8,000. Okay, opening capital. Now as a normal question we can complete this one. We have to make the table showing adjustments. Here 3 columns: A, B, C. First of all we can cancel the profit, because the profit is already distributed. For cancel or for cancelling the net profit. For cancelling the net profit, we have to debit the partner's capital account. This is 5,000, 2,500, 2,500. Now in the question what they are saying, they are telling that interest on capital is 10%. Interest on capital is not given, that we have to allow. So for interest on capital, it is given in the question is how many percentage? 10% of this one. So it is coming 1600, 1330, 800. This we need to credit. And interest on drawing is there for interest on drawing. Interest on drawing is given in the question. It is given 130, then 90 and 50. In the capital account, this we need to debit. Now one more step is there for distributing divisible profit. Divisible profit. How much divisible profit is coming? That will be profit. First of all, we can profit we can take, that is 10,000. From this interest on capital we have to subtract, that is 1600 minus 1330 minus 800. Then interest on drawing we need to add 130 plus 90 plus 50, 140. So this is the divisible profit. This 6540 we have to distribute in profit sharing ratio. This is divided by 4. So here 1635, 3270. This we are crediting. Now we can find out the net effect. Net effect will be, this is a credit and this plus 1600. Then total credit is this much, and 5130. 5130. So we are getting 260. Okay, this we will get 260, and this is a debit. Then partner B 375 will come. You just calculate. That will be credit, and for C it will be 1115, and this will be debit. Okay, like that you will get. And what will be the journal entry? Journal entry will be, this is debit. A is capital account debit, B is capital account debit to C's capital account. Okay, that entry you have to pass. No need of making the capital account. So this question's answer is over. Now we can go to another question. Our question is question 60C. A, B are partners in a firm sharing profits and losses in the ratio of 3:2. Their capitals on 31st March 2018 after the adjustment of net profits and drawings amounted to rupees 2 lakh and 1,50,000 respectively. Later on, it was discovered that interest on capital 8% per annum as provided for the partnership deed had not been credited to the partner's capital account before the distribution of profit. The year's net profit amounted rupees 75,000 and the partners had withdrawn 24,000 each. Instead of altering the signed balance sheet, it was decided to make an adjustment entry at the beginning of the new year, crediting or debiting the partners' accounts. Give the necessary journal entry as also a statement of details arriving at the amount of adjusting entry. Statement of details arriving at the amount of adjusting entry means a table showing adjustment that we are making for every question. Okay, this type of questions we are making that table showing adjustment. And here interest on drawing is not given the question. And another thing, like a previous question, the capital which is given here 2 lakh and 1,50,000, this is not the opening capital. This is the capital after the profit is added and drawing is subtracted. So we have to do the opposite. Drawings we are adding and profit we are subtracting, then we will get the opening capital. Opening capital you have to find out. Okay, it is given here 1,79,000 and 1,44,000 in the answer that you find. Okay, now we can make a table showing adjustments. table showing adjustments. Two partners only there, so two amount column is required. Partners name, it is mentioned A and B. First of all, we need to cancel the profit. So for cancelling net profit, profit sharing ratio, it is given 3:2, and the profit, it is given there 75,000. Net profit is 75, 15, then it is 30, and here 45. This we need to debit for cancelling. The next statement is for interest on capital. Interest on capital, according to the opening capital, we need to find out, and the rate of interest is 8%. So 8% of 1,79,000 into 8%, it is coming 14,320. This we need to credit. And next part is 1,44,000 into 8%, it is coming 11,520. This credit. Now distribution of divisible profit. Here interest on drawing we are not taking. Divisible profit, how much they will come? So this interest is this much plus 14,320. Total is this much. This you have to subtract from 75,000. So 49,160. This we are 3:2 divided by 5 into 2, 19,664. 29,496. This we are crediting. Now net effect. Net effect will be both the credit we can add it together plus 14,320. This is a 15,000. From 45 we are subtracting. We will get, no, some mistake is happened. 45,000 minus 14,320 minus 29,496. It is coming 1184. Debit was small, and here this is total 11,520 plus 19,664. This much we are deducting 30,000. We will get 1184. This is a credit. So entry will be B is a capital account debited to A is capital account. Okay. So this question also answer we got. Then we can see one more question. Question number 61. Assuming the capital are fixed in question 60A, B, C, give the necessary adjusting journal entry. So they are telling that in the previous questions we done question number 60A, we done B and C, we done today. In this question, if capital accounts are fixed, what should be the journal entry? And here two things is there. One is when we are passing the journal entry, we have to use a current account. Okay, we have to use the current account. And second difference is here when the capital is fixed, then when we are reading this question, the capital it is given here. So this capital is not affecting by profit and drawing, because profit and drawing is going to current account. So what is the capital given here? This only the opening capital. So no need of calculating the opening capital if this question it is mentioned that capital is fixed. So capital after the distribution of profit and drawings, that will not affect, because where if a capital is fixed, where the profit and drawing is going, it is going to current account. That is why this will be the opening capital itself. So what I am telling is, in question number 60A, no need of calculating opening capital. Then what are the things missed in the question? They forgot to give interest on capital, they forgot to give interest on drawing, and profit is already distributed. So the step will be, firstly we are cancelling the profit. After that, interest on capital we need to credit, interest on drawing we have to debit. After that, find out the divisible profit you credit, and find out the net effects. No need of calculating opening capital. What is the capital given in question number 60A, B, C? That only the opening capital. No need of calculating opening capital. What is the capital given? The same will be the opening capital. And interest on capital, you calculate on the capital which is given in the question. Okay, so you can do that. It will be homework. Okay, this question will be homework. I explained. You have to make a table showing adjustments, and you check it whether you are getting this amount or not. If you are not getting the amount, then you ask me, I will tell how it is coming. Definitely you will get the answer, because I told the reason. In what are the steps also I told. Question number 60A we already solved yesterday, and 60B and C just now only we solved. So in that question, interest on capital you calculate on the capital which is given. That only the difference. And while writing the journal entry, do not use a capital account, use a current account. Okay, so next day we can study something different. Okay, thank you.